Good morning. Welcome to Stock Market Today. It's Tuesday, March 16th, 2021. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. Just a quick programming note here before we dive in. Thursday will be my last day hosting this show as I have resigned from my role as the Chief Market Strategist at Chaikin Analytics to pursue a new opportunity. So programming note, Thursday will be my last day in the seat for the Stock Market Today show. Now let's dive in. U.S. equities finished higher on Monday, reversing earlier weakness with utilities, discretionary, REITs, and tech leading the charge. Now, again, the Dow, the S&P, and the Russo closed at record highs. At the sector level, materials lagged while energy and financials were the only sectors lower on the day. Treasuries were mostly stronger with the curve flattening. The dollar was stronger on the major crosses. Gold finished up 60 basis points. WTI crude finished down 30 basis points off its worst levels of the day. As we get to the desk this morning, futures it's a mixed bag. S&P futures are down about 10 basis points. NASDAQ futures are up about 40 basis points after Asian markets were higher overnight and while Europe is positive this morning. Treasuries are little changed. The dollar is flat on the major crosses. Gold is up 10 basis points. Bitcoin is down 0.5%. Crude oil is down 1.2% to kick us off on a Tuesday morning. That starts with more record highs for SPY and IWM. Throw the diamonds in there as well, DIA, and the song remains the same. We're waiting on you, Qs. We're waiting on you. QQQ held 300. We're wondering if new highs are to follow. Now, I think they are, and we're going to go through why I think that is and what we'll be looking for to kind of calibrate the odds of that. Guaranteed? No. But data points suggest yes. And I'm going to show you the data points that I would be watching if I was betting on the Qs joining SPY, IWM, and DIA at record high territory. In the meantime, not a ton has changed here. Support levels remain the same. Roadmap is in place. Go back to my note, February 28th, where I laid out the story, where I said, history suggests we're going to see some choppiness for the next few weeks before the trend gives way to a continuation to the upside. Spike in rates. We saw some choppiness in the equity markets, more so in the tech area, and the growth area, so the Qs. We've seen SPY go out to new highs. We've seen IWM go out to new highs. We've seen the diamonds go out to new highs. So we're just waiting on the Qs. But I mean, for all intents and purposes, the roadmap that I laid out in that note is playing out to a T. It's playing out to a T. Right? Choppiness, tested support levels, and then we rallied to new highs. Pretty straightforward, folks. Let's talk about our market in a minute. What are we writing about in the note today? Another record close for 3 of the 4 majors. We talked on that. Strength in Taiwan argues against continued U.S. tech weakness. This is what I'm talking about. And semis hold support and retake their long-term trend line. That's in my note. We're screening the S&P 500 today for classic bulls, and futures point to a mixed open, as I said. Major indices from a power bar perspective. Dow adds 50 bips, 9-4 bulls to bears there. S&P 500 up 60 basis points, 153 to 41 bulls to bears there. NASDAQ, your outperformer on the day. Get ready, folks. 22 to 20 bulls to bears there. Small caps lag slightly, 799 to 189 there. Bonds uptick, consumer discretionary, your best sector. 17 to 1 bulls to bears in the discretionary space. Remember, discretionary weakness is largely a function of cap weighting, with Amazon and Tesla being the biggest market caps in that group. Other parts of discretionary look just fine. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Markets are trading at all-time highs. I see a lot of consternation out there. Everybody's concerned. Everybody's, woo. Folks, a handful of high growth stocks that don't make money got hit. Everything else is working. If you took the balanced approach that we've been talking about for months now, maybe you might have had some growth. Maybe that would have hurt you a little bit. You would have gotten stopped out. But the other side, your cyclical side of your portfolio, should have more than offset it. That balanced approach really came into ended up being a good call here. All right, let's hit our stocks of the day. I said we're going to screen for classic bulls, and with the markets in an uptrend, why don't we just find the leading stocks and leading areas? Let's find the best of the best. I limited my search and my starting universe to the S&P 500 just to keep it manageable. It doesn't have to be the S&P 500. You can look at any group you want for classic bulls, but a classic bull, remember, at Shaken Analytics, we define it as very bullish and bullish rating. Price level is in an uptrend above a rising long-term trend line. 6-month highs in persistency of both money flow and relative strength, and whatever. We limit this to $10 stocks and higher. And you can kind of see an interesting mix here. Very much skewed right now to the cyclical portion, right? We've got Citizens as a bank, GM, right? Paper as an industrial, Key Corp as a bank, Mohawk, right? Mosaic, part of that ag theme, CTVA, part of that ag theme, Freeport, Open, right? So we've got a lot of financials, but Texan in there as well, and Martin Marietta. And so it's an interesting group in the S&P 500. If you use a broader universe, you'll get more names. Obviously, I need to kind of keep things manageable. But Silicon Valley Bank has been one of our favorites for readers of our market survival guide. That's been an open idea for about 80% now. Just kind of an interesting way to look at the world. I think, finding the best stocks and the strongest stocks. And when the market's in an uptrend, it's great. But, if all you want to do is be in line with the market, just own the SPY, right? If you want to outperform, do the work and find the winners or the potential winners. And I think this is a great starting point, an absolutely great starting point for idea gen. So is it, do you just run out and buy these? No, they have to fit your setup, your timing. But if you're building lists, I think this is a great starting point. Let's look at our sector tracker now, moving to the last 5 days of trading. Everything green except for energy. Energy getting a little bit of a pullback here. That's fine. It's not a monster run. It's entitled to a break. Right? Picture a sprinter doing laps, going all out for a little while, needs a break. That's it. Discretionary, top of the list coming on. Remember what I said about discretionary. There's a lot of good looking stuff in discretionary. 2 names had been holding it back. REITs are coming on, and that's interesting. I think you want to pay attention to the fact that the defensive yield areas of the market have stabilized a bit on a relative basis. That's interesting. Perhaps it's just people coming out of treasuries and still looking for some sort of income. I don't know. I don't get overly caught up in the narrative. I just kind of watch the trends, and that's what I see. Tech in the top 3 is encouraging. Utes, comms, industrials, materials, middle of the road, healthcare, staples, fins. Lower on the list, but up over the past 5 days of trading. And energy, as I said, taking a little bit of a breather. Same with the fins here. Right? They've had a monster run. They don't, this is a 5-day look, right? Depending on your time frame, 5 days may matter to you. Depending on your time frame, 5 days might just be a blip. Noise, depends. Only you know you. You have to do you. I try to give the data, my thoughts. You make your calls. You do you. Make it your own. Industry in focus today, NYSE Tech Services. We're going to see a lot of tech today. Over the past 6 months, been an outperformer actually by about 10.6%. Power bar ratio flipped strong, 9-8 bulls to bears there. Number 16 of 21 subsectors, having moved down 2 slots over the past week. Some names to think about here: Intel. Remember, there's an activist investor involved in Intel. Micron, MU, and Alphabet, Google, GOOGL. All 3 of those stocks have very bullish ratings. All our holdings in a fund that is fighting to hang on. Fighting, not quite there yet, but fighting. Nice uptrend, has started to waver. Remember I said the uptrend is wavering? Well, here it is. This is do or die time. Did we break down and fade? or do we regain? Now, if you look at things like the Qs and XLK, we've kind of regained the trend line. This fund in particular has not. However, underperforming, yes. Overbought, oversold, room to overbought, money flow. All right, so this is kind of a wait and see. You wait and see if it can kind of regain that trend line there. So far, not yet. Let's look at our movers and shakers, gainers and losers. United and American presented at a JP Morgan event. Those stocks higher by 8% and 7% respectively. GE up on comments from UBS. LVS and NRG, nothing company specific to drive trading in those names. Loser side of the board, Lilly gave some data on an Alzheimer's drug, took 9% out of the stock. Oxy down 4.3% as Carl Icahn is going to be selling some shares. Remember, he's an activist involved there. EMN, XRX, and UPS all down about 3%, nothing company specific to drive the trading in those names. Let's drive in because all eyes are on tech. Here's XLK. XLK is dancing with the 50-day moving average while holding above the 200-day moving average. What encourages me is that the fund has not become oversold, right? So right now, we just kind of have to treat this pullback similar to the way we treated it in September, October, November, whereas, it was a pullback below the 50-day, did not become oversold, and then reasserted. Right? That's what we're seeing so far. And again, go back to the work from February 28th, and that's the base case. The longer-term trend is up. The near-term trend is wavering, likely to resolve to the upside. This is a very similar setup to what we saw in September and again in November. The difference this time is the extent to which XLK has cracked on a relative basis. When we dipped in September, Scooter barely budged. When we dipped in November, it budged a little more, but held above 50. Now we're down at 38. So yes, can tech work? Of course tech can work. Is it going to be the leader that it was? That's the question. Let's start with just regaining the uptrend. Let's start there. I think we're going to regain the uptrend. I think the Qs are going to take out the highs. I think XLK is going to take out the highs. The question is, will they be the fastest horse? And that remains to be seen. So we're watching closely for relative strength. We're watching closely for absolute price momentum. But, remember, it can go up, but not lead. And that's an interesting development, and that will have portfolio implications, or at least it should. Taiwan and Tech. So again, everybody's kind of wondering about tech. Will tech in the U.S. crack? Is this the start of a rollover? And I don't think it is, because I think that if it was, I think we'd also see the rollover in some of the countries that are highly levered to technology. So think South Korea, think Taiwan, right? I'm using Taiwan here as an example. Taiwan, obviously Taiwan Semiconductor, one of the most important companies in the world, is the largest company on the Taiwan exchange. Taiwan has not cracked, holding its 50-day above its 200-day, right? Here's XLK getting back above its 50-day. Look at the 21-day correlation between Taiwan and XLK. It's generally positive. So if Taiwan reasserts from its 50-day, odds are XLK is going to do the same. Is it guaranteed? No, but odds are, right? We're playing an odds game here. So I'm watching that closely, and I'm also watching the semis. Right, here's SMH, Van Eck Vector Semis, trying to get back above its own 50-day. Notice the RSI has not become oversold, so that tells you that the trend to the upside is strong, and thus far holding on a relative basis. So if you're paying attention to tech, today's presentation was for you. Odds favor tech and the Qs making new highs, and these are the data points you want to watch to monitor that. That'll wrap us up. I'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.